All right, let's dive into this one. It's crazy, right? The Intelligent Investor. This book has been like the Wall Street Bible for what, like over 70 years?
It's incredible. It really is a testament to the power of those core ideas, about value investing.
Yeah. So what is it about this book? What do you think keeps it so fresh, keeps people coming back to it? I mean, 70 years in the financial world, that's an eternity.
Yeah, well, you think about it, a lot of the stuff out there is like, what's the hot stock? What's the quick win? This book, it's not about that. It's about like the philosophy of it. It's about finding those companies, those assets that are actually worth more than what their price tag is.
Okay. I love that. So it's not about like, jumping on the bandwagon, chasing the latest, meme stock or whatever.
No, it's like, really understanding what you're buying.
It's about value,
Exactly. It's about value.
value investing. So let's break that down a little bit. For someone who's, maybe just starting out dipping their toes into the market, what's the simplest way to understand what value investing is? What sets it apart from, all the other noise out there?
I think a good way to think about it is imagine you're buying a house.
Okay.
You're not just going to look at the listing price, right? You're going to think about the neighborhood, the size of the house, the condition, if it needs work, what kind of potential it has to, go up in value over time. And value investing is kind of like that, but for the stock market.
Oh, I see.
It's about looking beyond, like, what is the price right now and thinking about, all right, what is this company actually worth based on its fundamentals, its business, how much money it's making, all that stuff.
So it's less about speculation,
Exactly.
more about like informed decision making.
It's about being, like, you're not just gambling.
Right.
You're making a calculated, you know, decision based on research.
Long-term vision. Right.
Yeah, long-term.
And that brings us to one of Graham's like, big things he talks about in the book, right? He's got this distinction between investment and speculation. How can I tell as like an everyday person, am I investing or am I just like getting caught up in the hype?
Well, he really makes it clear. Like, if you're sitting there, you're refreshing your stock prices, every couple of minutes, making decisions based on, like, gut feeling, like, oh, this is going to go up, this is going to go down.
Like that's more like gambling then.
That's exactly what it is. Yeah, that's gambling.
Gotcha.
Okay. When you're investing, in the way Graham talks about it, it's about understanding a company, looking at their financials, really seeing, like, what is their potential for the future?
Okay. So no crystal ball, just like real solid research.
Yeah.
And I think this is where his Mr. Market metaphor really comes in handy. And I love this. I mean, it's such a simple concept, but it's so powerful.
It's brilliant.
Can you break that down for us?
Yeah. So Mr. Market, he's like this character, right? He represents the stock market.
Right.
But he's not like this rational, calm, force. He's very emotional.
Oh, like the market itself.
Yeah. It's like, imagine he's your neighbor and he comes to you every day and he's like, hey, I want to buy your car.
Right.
Yeah. Some days he's like super excited. He's offering you way more than it's worth.
It's like a bull market.
Totally. Yeah. Other days he's like down in the dumps. He's like, I'll give you like $100 for it.
So how do we avoid getting like swept up in Mr. Market's like drama? Because he sounds a little unstable.
Yeah, well, that's the whole point.
Okay.
The point of the metaphor is that he's not there to guide you. Mr. Market is there to serve you.
Ooh, I like that.
So, like, you don't let his emotional state dictate your actions. Think back to, like, 2021, right?
Oh, yeah.
The tech stocks, everything was booming.
Everyone was buying everything.
And a lot of people got caught up in that, and they were ignoring, like, the fundamentals of the companies.
Yeah.
They were just, like, riding the wave.
The hype train.
The hype train. And then what happened?
The bubble burst.
Exactly.
And people lost like a lot of money.
A lot of money. And that's because they weren't thinking about, like, the long-term value. They were just reacting to Mr. Market's mood.
So understanding Mr. Market, that's like key.
It helps you see those patterns. And it helps you not make, like, rash decisions based on, what everyone else is doing.
Makes sense.
Yeah.
Now that leads us to another really important concept from the book, which is margin of safety.
Yes.
This, to me, seems super crucial for, like, avoiding those potential losses, especially when, Mr. Market is acting a bit,
A bit crazy.
a bit crazy.
Yeah. So think of margin of safety like your, like, financial buffer zone.
Okay, buffer zone.
Graham says You want to buy stocks when they're trading below what he calls their intrinsic value.
Intrinsic value meaning?
Meaning like what the company is actually worth, like based on all those things we talked
Yeah.
about, their earnings, their assets, all that stuff. And that difference between the price you pay and what it's actually worth, that's your margin of safety.
Oh, I see.
So like if things don't go exactly as planned, or if you were a little bit wrong in your assessment of the company, you've got that cushion.
It's like a safety net, kind of?
Exactly.
Okay, I get it, I get it. So how do we actually figure out that intrinsic value? Because that seems like kind of a tricky thing.
Yeah, there's no like magic formula.
Yeah.
But Graham points to some like key factors. So, we're talking about a company's financial health, like how much debt do they have? What are their earnings like? Have they been growing their earnings?
Okay, so you really got to dig deep.
Yeah, you got to look at their financial statements.
Yeah.
You got to understand their business. Like, what do they actually do? What are their plans for the future? It's like detective work.
No shortcuts.
For shortcuts, yeah.
But I like that. I mean, that's what makes it interesting.
Yeah.
Now, Graham also talks about different types of investors, right?
Mm.
He's got the defensive investor and the enterprising investor.
Yeah. He does. And I think this is really cool because it's like he's recognizing that not everyone is the same.
Right.
We have different goals. We have different, personalities.
Risk tolerances.
Yeah.
So, like, what are the key differences between these two approaches?
So the defensive investor, they're all about safety. They want stability. They're looking for companies that have a long track record of like solid performance. Maybe they pay good dividends. They're not as worried about like finding the next big thing. Think like, those really established utility companies or like, consumer staples, the things people buy all the
The
time.
things you always need.
Exactly.
Okay, makes sense. What about enterprising investors?
Enterprising investors, they're a little bit more, they're willing to put in the time, the effort to do the research,
Oh, okay.
to dig deep.
So they're not afraid of a little risk.
They're not afraid of a little risk, no. They're looking for those hidden gems. The companies that the market maybe hasn't fully recognized their potential yet.
Ooh, I see. So which one are you?
I think I'm a little bit of both. Like I really appreciate that like discipline, that stability of the defensive approach.
Yeah.
But then I also like can't help but like, get excited about the possibility of finding like,
The diamond in the rough.
yeah,
It's like the thrill of the hunt.
exactly. Exactly.
So maybe it's about finding that balance,
I
right?
think so, yeah.
Now, no matter which way you lean, Graham is also a big proponent of not putting all your eggs in one basket, right?
Absolutely.
Diversification.
Diversification is key.
Even if you're like, super confident in one particular company or industry,
Even then.
Right.
Because you never know, right?
you never know.
And, spreading your investments, you're mitigating that risk.
Right.
So, having a mix of different companies, different industries, different types of assets, like, stocks, bonds, things like that, it helps to balance out those potential wins and losses.
And it's interesting because Graham, he's primarily focused on stocks, but he even acknowledges like the role of bonds, right,
He does.
in a balanced portfolio.
He does, especially for, folks that are maybe a little bit more risk averse.
Yeah.
Bonds can be a good way to kind of stabilize things.
Provides that balance.
Yeah.
And this all circles back, I think, to another really big takeaway from the book, which is that long-term mindset.
Absolutely.
The intelligent investor. It's not about like making a quick buck.
No, it's the opposite of that.
It's not a get-rich-quick scheme.
It's about patience.
Yeah.
Discipline.
And like tuning out that noise.
All the noise. Because the market is going to go up, it's going to go down.
Mr. Market's going to be up and down.
Exactly. But if you have that long-term perspective, you can ride out those waves.
So it's about like developing a philosophy, a mindset,
Yeah, and almost like he wants you to think like you're becoming a part owner of these businesses that you're investing in.
That's interesting.
Yeah, you're not just like buying a piece of paper.
You're buying into something.
You're buying into a company.
Yeah, you're looking at their future.
You're thinking about their future.
That's a really cool way to look at it.
Yeah. And I think that's what makes it so powerful. And honestly, one of the things I find most fascinating about this book is that even if you never buy a single stock, the principles in it are so applicable to life in general.
Ooh, tell me more about that.
Like just that idea of understanding value,
Yeah.
assessing risk, making decisions that are based on like thought and research, not just emotion. That's powerful stuff.
So true. I mean, you can apply that to buying a house, negotiating a salary,
Totally.
all sorts of things.
Choosing a career path.
Yeah.
It's all about making smart choices.
So the intelligent investor, it's more than just like a financial guide.
Yeah.
There you go.
It's like a life guide
Yeah,
almost.
I love that.
Yeah.
Well, if this deep dive, sparked your curiosity, I highly recommend checking out the full book.
Yeah, it's a classic for a reason.
It really is.
Yeah.
And, who knows? Maybe you'll find yourself thinking about the world a little differently.
That's the hope.
All right. Well, thanks so much for joining me on this deep dive.
My pleasure.
And we'll catch you all next time.